All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to do an update on a company called AYRO, stock ticker AYRO. This is a small cap, high growth stock in the EV sector. We cover these types of stocks a lot on the channel, so please remember to subscribe and hit the notification bell. And everybody, please smash the like button. It helps out the channel a lot. Okay, I want to talk about AYRO. They released their Q1 2022 earnings report today. So I want to go through that earnings report and talk about it. I also want to talk about the valuation on this company and take a look at the chart and go through some potential target prices. Let me start with the press release. Okay, AYRO announces first quarter 2022 financial results and provides corporate update. May 2nd. So this was this morning at 7:30. So you can see this is the first quarter ended March 31st, 2022. So recent financial and corporate highlights. Let's go through and just talk about some of these highlights. Record revenue of approximately $1.03 million. That's 30% year-over-year growth, but more importantly, that is 26% sequential growth. So that means quarter over quarter. So they're up 26% from the last quarter. When I look at small cap high growth stocks, I really like to look at the sequential growth versus the year-over-year growth, because a lot of times the year-over-year growth is not as meaningful. But we know, unless there's a seasonal nature to what these companies are doing, that if they're a high growth company, they should be growing on a quarter to quarter basis. So we definitely see that here in this report. This is a 26% growth sequentially quarter over quarter. That is significant. Now, I will say $1 million in sales is still very low versus what this company hopes to do over the course of time. But again, they are very early stages in revenue in this company. So they are hitting, this was their best quarter ever. So although sales are nowhere near where they want them to be, ultimately this is on target. This actually beat estimates and it represented strong growth. Okay, number two, 41% sequential reduction in net loss from $7.8 million in Q4 2021 to $4.6 million in Q1 2022. So that's important. One of the things that's happening, this company got a new CEO about 6 months ago. One of their targeted missions was to reduce cost and overhead and be more efficient as a company. So you can see they've made a major step in this direction. This is 41% sequential reduction. Again, that's quarter over quarter. That's a 41% improvement. For a company that is still early revenue, they don't want to burn through their cash. So you can see this is greatly reducing their cash burn rate. And they go on to say, with expected continued reduction in net loss in Q2 of 2022. So they're forecasting even better cash flow in the next quarter. That brings me to cash. Total cash and marketable securities of $63.5 million and no debt as of March 31st, 2022. So that means their net cash position, cash net of all debt, which they have none, is $63.5 million. You'll see when we look at AYRO, they're trading at $1.07 right now. Their 52-week low is 95 cents, so they're a little bit off of their 52-week low, but fairly close to it. That leaves them with a market cap of $39.49 million. So $39.5 million of market cap, $63.5 million of cash net of all their debt. That means this company is trading at a price that is far below the net cash that they have in the bank. Now, I will say there are certain circumstances where that makes sense. If you have a company and their growth has slowed and their cash burn rate is high and they're spiraling down towards bankruptcy, then you sometimes run into these scenarios. Effectively, what's happening here is this company has an enterprise value that is negative $30 million, meaning if you take the cash out, people think this company is worth a negative amount of money. So that very rarely makes sense. I'm not saying never. You'll be hard pressed to find very many examples of this. And when you do find them, it's usually a company that's performing poorly and is highly likely to go out of business, in my personal experience, as I've come across these. This company doesn't fit any of those criteria. With $63.5 million and an ever-reducing cash burn rate, they have many, many years of cash flow left. So to me, when I look at this and I see a negative enterprise value like this, and you'll see this stock needs to, not quite, but almost double just to get back to a zero enterprise value. So to me, there's a lot of almost built-in upside to this with very small downside risk. Now, again, this is not financial advice. There is always risk to the downside. Every company could go to zero. And obviously, this company has fallen drastically. Okay, some words from the CEO. The first quarter of 2022 can be characterized as one of efficient and strong performance. We accomplished everything we previously committed to doing in our last earnings call. So to me, as an investor, that's one of the most important things that I look for. They give an earnings call, they talk about potential, they set goals for themselves, and they have met those goals. So that's a key criteria for me. We recognize record revenue, continued to reduce operating expenses, narrowed net loss, and made excellent progress on the development of the AYRO Z next generation light duty electric vehicle, with a continued focus on launching the AYRO Z by year end. So this is a company that, since they got their new CEO, they've done several things. They've had a lot of cost cutting efforts. So by reducing overhead and costs, they're a much more efficient company, and it clearly has not affected their operations because they just broke their all-time sales record. In addition to that, one of the things this company has done is recognize that the vehicle that they were presenting to the marketplace was not quite what the marketplace wanted. So they have now this AYRO Z that they're going to introduce by the end of the year with some significant improvements. As they continue to set record sales in 2022, they're expecting a significant increase in sales in 2023 when the AYRO Z is launched. On the strength of record unit sales of the Club Car Current, revenue in the first quarter of 2022 increased by 30%. This marks the first time in AYRO's history that the quarterly revenue surpassed $1 million. So again, this was a record quarter in revenue. Customers are increasingly finding the value in having an electric light-duty utility vehicle with zero emissions that can be configured to suit their needs. So we continue to expect sequentially higher revenue in the second quarter of 2022 despite global supply chain challenges. So they broke their all-time record in Q1. They expect sequential growth, therefore breaking it again in Q2. So you can see some positive things are happening here. Now again, I'll reiterate that $1 million in a quarter is definitely not anywhere near where their target numbers are in the future, but this is early stage revenue company. So continued record sales growth is good, and this new model should allow them to start to hit some numbers in 2023 that are going to make a lot more sense. With all that said, let's take a look at the chart. Okay, I'm going to start on the zoomed out chart. This is AYRO chart on the 1 week time frame, so each one of these candles represents 1 week. I just want to show you that basically, and this is a little bit outside of their 52-week range, so you can see that over the last year and a quarter, this stock is down over 90%. So that is a drastic pullback in the price of their stock, down to the point where it is now almost half of its cash value, its net cash value. So I'm going to zoom in a little and take a look at some more realistic numbers. Okay, this goes back to November. So this is the last 6 months of activity. So you'll see in November, they were trading at $3.38. So their stock is down actually 68% just since November. And remember, this is way off of their recent highs. Their highs from about 15 months ago was around $10. So this was already a massive reduction to get down to $3.38. From there, they're down another 68%. Just for this company to get back to a valuation of 0, they would need to trade back to where they were on January 3rd. So that's a 68% increase in the price of their stock. I'm going to do one more. Okay, so this goes back to December 1st. This is now 5 months ago. So if they were to get back to their December 1st price at around $2.34, that would be about a 120% increase in the price of their stock. So that is much more than a double. So the reason I feel this is a realistic price target, and again, time frame is difficult on this one because this stock did spend the better part of a year falling in a straight line. However, the reason I feel like there's some light at the end of the tunnel is the last 3 months, this stock has been trading sideways. It is no longer collapsing. It feels like it's bottomed out. It's got a nice solid line of support here, somewhere around $1. And again, it's got to get back to about $1.75 just to get back to the amount of cash they have in the bank. So of course, there's always downside risk. Every stock can go to 0. So, I don't know what the downside risk is. However, I do feel from a risk-reward standpoint, this is at a very strong line of support and it has nowhere to go but up. A lot of this price activity from $3.38 down to about $1 really has very little to do with AYRO in my opinion. It has to do with the fact that in that 5 or 6 month window of time, small cap high growth stocks got destroyed. So you will see stock after stock, and if you review the stocks that we look at on this channel, this is a very common looking chart. So I do believe that this was caught up in the the tidal wave of downward pressure, we have moved into an absolute 100% risk-off environment. That will not last forever. So we don't know how long it will last for. So, one of the risks of this stock is that you're going to buy and hold and be stuck with it potentially for a long time. But I do see upside on this if they can continue to execute the way they have been for the last few months. So again, I need to reiterate, this is not financial advice. This is how I'm looking at this. I think it's sitting in a very good risk-reward situation. I think it's sitting at a very good entry point, basically at its recent line of support. So for those reasons, I already hold AYRO and I have added to my position, but obviously you guys have to make your own buying decisions, so please do your own due diligence. This has been a very volatile stock. Like we said, this stock's down 90%. So invest carefully. So that's all I got for you on AYRO. If you're still watching, thanks so much, and don't forget to subscribe to the channel and smash the like button. So we will see you in the next video. Thanks.